on to the Smart Property Investment Show with your host, Phil Tarrant.
Hello everyone, welcome to the Smart Property Investment Show. Good to have you with us today. We're recording this on the same day that this is being released, which we typically try to do to make sure it's timely and newsworthy. So I'm going to get something off my chest and out of the way before we get into it, because I'm sure it's going to be brought up as soon as you hear the accent of the gentleman I have in the studio today, Andy Scott, property investor. Andy, how are you going?
I'm good, Phil. How's things?
Good. Let's get this cricket thing out of the way, because I know you're going to bring it up.
Well, I wasn't going to, but now you have brought it up.
Really? Well, you can't cheat in property investment, but it seems you can cheat in cricket.
Well, yeah, you're Aussie heroes, mate. They've let the world down.
Yeah, what's your view of it all?
Oh, look, they all do it. All professional sports people are cheat.
Yeah.
They don't all get caught, though, do they? And that's the trouble right there.
It's not a good look, is it?
No, it's not a good look. And it certainly is Aussie citizen now, so proud Aussie, travelling on an Aussie passport. But, certainly can't point too many fingers when it comes to English cricketers tampering with the ball as well. Nice mints on there, getting a bit of reverse going. So, yeah, they all do it, but they don't all get caught.
Yeah. So, just thought I'd invite you to the studio today. You're a property investor. I believe you've got about sort of 2 or 3 properties with you and your partner.
Yeah, I've got, myself and my partner have 3 properties between us. So I got 2 originally. Yeah. And then I harangued and badgered her to use the money that she had sitting in her bank account, earning very little interest, to get a property herself as well. So we've got 3 now.
Okay, so I just want to really, today we'll lift up the hood, have a look at this portfolio, the way you see the world, your appetite and sentiments towards property right now. Obviously, it's in the news as an asset class, which is potentially going to come down sort of 40+%, depending who you hear about. So I get your views on that. But you mentioned that you are a proud Aussie citizen now and investing in Aussie property. Why are you investing in property, Andy?
Look, I think if you go back throughout the annals of time, those that have done well for themselves when it comes to, their own financial freedom is the buzzword that gets used nowadays. But the fact that people who have money generally own land. Yeah. And to own land generally means you've got to earn something on that land as well. There's no point having a patch of land out and whoop somewhere that's never going to do anything. So to me, it's always appealed to me, the idea of property. I think it's always been a solid thing. If I look at people I know in my life, everyone I know who's done quite well for themselves owns a property in some way, shape or form. Now that may not necessarily be as an investment class the way I use it, but they've all had properties nonetheless. So it's always something that's appealed to me. I guess the challenge always is with property is it's quite an expensive thing to get into. You can sit there with a couple of grand in your pocket and start dabbling in stocks and shares and other asset classes, but with property, obviously, you need a little bit more to get yourself going.
So you're pretty representative of the classic, typical, whatever you want to call it, Aussie investor. You've got 2 investment properties. There's a lot of people in this market who only ever buy 1 investment property. Often they want to buy more, but the first property they buy is the wrong property, and therefore it hamstrings them for a period of time. You have 2 properties. Is this something you're looking to grow? Are you looking to grow your portfolio?
Yeah, well, look, my long-suffering partner, we've been together sort of 12 years now, so what's mine is hers.
So 3 properties then?
Yeah, so 3 properties. Oh, one and a half, really. But yeah, absolutely. I think I'm conscious of, I've seen investors, and to a certain degree I saw it with my partner as well, and the first property she's picked up has not all been sunshine and lollipops. I was very lucky with my first property. It didn't have any trouble with it. Everything went swimmingly. Got a reevaluation on it sort of 12 months later, and it was valued at plus 50, 60K that I bought it from. Hers has not been like that. She's had a lot of problems with plumbers, with tenants, with all sorts of niggly things. It's no surprises to anyone who invests in property a lot, but if it's your first one, I think that's probably enough to make you go, oh, that's put me off. And she refrains to me a lot, going, I've put 60 grand into this and I'm not seeing any profit. I'm not seeing any money back. So I think without having support around you or knowing that it's a bit of a long-term play, and you know what, there's going to be downs as well as ups. I think it's really easy for people to go, oh, I'm not going to do another one. It's an expensive thing. It's easy to say it doesn't work, especially in an environment where there's lots of other things that appear to be working well. If there's, geez, get your money in crypto, there you go, you have a 1,000,000% profit in 3 days time sort of thing. So I think that's something that happens to a lot of people. I consider myself really fortunate that knowing a lot of investors, knowing a lot of people who have gone down this path and got a lot of properties, that these were the sorts of things that were coming, and it's not a short-term game. It's a long-term game, and you've got to get yourself prepared for that, not just financially but mentally as well, to understand that that's going to happen. You might have something that's going to be a bit of a pain in the arse, to be honest, to deal with for months at a time, years at a time, but ultimately the fundamentals behind it, if you've done your homework and you've got the money behind it to be able to help support what you're doing, you're on the right track and you're in good stead.
So how do you go from your current portfolio to adding to that? Is there any particular steps that you need to do in order to get there, or you just need to wait until the current properties you have to go up in value so you can draw down on some equity?
Oh, look, it's 6 of one and a half dozen of the other. I had enough, I'd saved enough money to be able to get more than one investment property, but it was very much the first one. What I'll do is I will sit there and get it and just see how that goes, get used to being a property investor, get used to the calls that come in, get used to the various sheets that come in from your property manager about what rents come in, what payment needs to go out because
so the reconciliation and stuff,
all those sorts of things. But I was always of the mind that I wanted to get more. I was confident I used a property buyer, and I was confident from their track record and in conversations with them that they would get me a good property that would allow me to go up in equity and scrape equity out. But it wasn't the only thing. It wasn't, if it doesn't go up in equity, then I'm stuffed, or not stuffed, but I'm sort of stuck on one. So I made sure that the first property I did was as, cheap and cheerful, and that I had capacity to be able to get another one without having to save that much more in those regards. So that was sort of my approach to it.
So you've been looking for high growth properties in terms of equity?
Yes.
As a primary consideration, and the fact that it generates good yield as a secondary consideration?
Yeah, initially. Okay. Initially I wanted areas that were going to grow well. I had planned to put money aside so that if I had a shortfall between ingoings and outgoings, that wouldn't leave me hamstrung with other things to do. But I always wanted to make sure that the growth was there, so that it would be easy for me to get the second one, and then from there easier to get the third one. And you know yourself, Phil, if you have one property and you have problems with it, you've got problems with it. If you've got 2, 3, 4 properties and you have problems with one of them, those problems are actually smaller in impact in terms of their impact over the overall portfolio.
And do you think so far that you've been a good investor? If you were going to sort of hard mark yourself and say, I could have done this better or that better, what would those few things be?
Oh, no, I'd struggle to give myself above average.
Really?
As an investor, yeah. I think
slightly just above average?
I probably wouldn't even go that far. Okay. And I think the thing, and the reason I say that is, and this is probably part of the reason why my partner is anxious about these things, is that she's a fantastic planner. So she'll plan everything. She'll get all the numbers down and she'll look at everything and plan it all out to where she's going. I'm a bit more back of an envelope kind of guy, so I will look at the numbers. Yeah, they look all right. Yeah, I don't mean that blasé, but I'll make sure it's okay. But once it's up and running, yeah, it's all right. I'll check the monthly statement. Yeah, rent's coming in. Yeah, mortgage hasn't gone up that much. Yeah, she'll be right. Don't worry about it. So I could probably be a lot more diligent on these things. I know for a fact that I've got a property that I haven't got a depreciation schedule done on. I have on one. I haven't done it on the other one yet. And in my mind, I'm like, yeah, I'll get to that. So, which really I should do it straight away. And so yeah, I wouldn't rate myself highly at all.
But that's a fair and honest, frank assessment, and the fact that you can consider the way you're operating and your approach to property is quite a good thing, right? It's okay to say, yeah, I could do better, but do you reckon it really matters that much? If you're spending 2 or 3 times more time now than what you're doing spending on your property portfolio, would it make any difference whatsoever?
Oh, look, I think in terms of how the property performs, no. In terms of how the portfolio performs, no. In terms of the mental health of the people around me, probably yes, because there would be that feeling that things are more in control, and that there's less to worry about because everyone knows what's going on in those situations. I certainly am a bit more, as I said, a bit more, clearly adopted that from my country of origin now, with she be right
She'll
attitude.
Be right,
so, but yeah, I think it would be better in those terms for sure. But it's not something that I worry too much about. And part of that, to put it back, I don't stumble in like a blind idiot, throwing money away and not worrying about this and not worrying about that. And yeah, I'll be lucky, it will be fine. But I'm not as meticulous as some people are. So when it comes to tax time and getting those things, yeah, I've got my numbers organised. I've got it all there. I pull it all together. But I'm not one of these people that sort of reviews their portfolio every month, which I know a lot of people do.
They do, and a lot of people, I think, are mistaken in thinking that property is a passive investment. The best investors I see are on it all the time. They're very tight, their numbers. They actually understand how their mortgages are ebbing and flowing depending on interest rate environment or when it might be coming off an interest-only period. They know their tenants. They know when their leases are due. They know et cetera, et cetera. Whereas other people are a bit like yourself who just know it'll sort of sort itself out in the wash, and what works for you is right for you, and that's okay. But to your point around worry and risk, I guess, because worry is associated with risk. If you're risky but you don't think you're risky, you probably don't worry too much about it. Whereas some people who probably push the boat out too far for themselves and sit there and concern themselves and worry about it all the time can put themselves in a bad situation in terms of mental health challenges.
I think so. And like so, I would add the caveat to that I made sure I had a buffer. I've got a buffer.
So how big's your buffer? Have you got like a number that says I've got 3 months worth of being able to pay the portfolio costs without a tenant in there? Is that how you frame it?
I'm not even that meticulous about it. I make sure that I've got about 10 grand sitting there for every property as a buffer. So I've got about 30 grand sitting there that's it's not part of the officer, it's not part of anything else. It's part of that
cash money.
Yeah, if I need to, and yeah, it's sitting there, but I know that's earmarked as long as I don't draw out of that's there for any big problems that come up. And the biggest problem that came up with one of my properties is I got a nice little rate statement through. So it's property I've got up in Holmview, which is near Logan in Queensland. Yep. Got a nice little rate statement come through.
Is it a house or a unit?
It's a house.
Yeah.
The rates typically were about the 800, 900 mark for a quarter, which is fine. And then this bill came through for about $3,500. Which obviously I was quite surprised about by that, and looked at it, and it was water that seemed to be the issue. So I called up my rental people and like, what the hell's going on with this? What's going on? What my tenant's doing? And they were like, oh yeah, we had the meter reader came round, and there's been a burst in the main basically. And as is always the case, it's your side of the meter, which means you're responsible for it. So
let's just quickly pick up. If your side of the meter means that where your little tap is out the front of your house, if the problem is from there into your house, it's your problem. If it's on the other side of that, it's the water boards. Probably is the old term for it. Yeah,
basically. Yeah. So it was my problem. I said, okay, let's first of all let's see how that's going to get fixed, and then the probably something I should have looked at when I got the place originally, but the main pipe that comes through, someone back in the day when they built the thing planted a lovely little tree just over where the line is, which is now sort of 20-25 years later a lovely big tree.
Yes.
And they suspected that the leak's probably under that. There's no way we're getting to that without
getting rid of the tree.
Ridiculous amount of work. Getting rid of the tree, digging it all up, all that sort of stuff. So your only other option is to basically put in a new pipe. So I had the huge bill, and then I had the pipe to put in as well. Now that all up was probably a hit of about $4 or $5 grand. Don't get me wrong, I don't want bills like that coming through my letterbox ever. But at the same time, I was able to go, well, you know what? Did I want this situation? Of course I didn't. But have I put something aside for if these situations come up? Well, yes, I have. It's not ideal, and you know what? It may have put the portfolio back a year or 18 months, but I'm not panic station. I'm not all of a sudden, oh my giddy aunt, I'm on tomato soup for a week, or 6 months to try and get this money back. I had it there put aside to do those things. So as got all those bills paid, got that sorted out, that's fine now. And now my focus is, well, now I just made to put money in to build my buffer up again, which will hopefully come before another episode like that comes about. As I said, that's just for that one. I've got another 10k sitting for the other property, and we've got another 10k sitting for the other property, just for those things aside. So
just rainy day money.
Yeah. So whereas I'm not, one to be meticulous all over the facts and figures, I'm reasonably risk averse. I'm not when it comes to real money. If you see me play poker for $10, then obviously I'm a bit of a maniac, but why wouldn't you be? But when it comes to real money, then I'm a bit more, I'll build myself a buffer of basically to minimize risk as much as possible, as much as for my own benefit as anything else.
Well, what you've just done there, Andy, is you've given me the focus for this particular podcast, as in this dire circumstances, and Andy was there to fix it, and you've given me about 1,000 sound bites and quotes where I'm sure we can write plenty of stories off the back of it.
Well, happy to help.
You've just given a bit of flavour
flavour
and texture to your story.
Well, there we go. Thank you
which
very
is
much.
Which is always good. You mentioned that you use property manager for all your properties. Is that, yeah.
Not the same property manager, because they're in different. They're all in Queensland, our properties. So one's in Homeview, which is in Logan. One's in Slacks Creek, which is stone's throw away, to be honest. And then we've got one in Leichhardt in Ipswich.
So how big? What is the total value size of your portfolio? You think if you
total value of the property is probably about 850k.
Okay, you know what sort of debt you carry on them?
Off the top of my head, we're probably carrying about 600 on that.
Okay,
at the moment.
You got a bit of equity in there.
Yeah,
and you're still saving on the side as well.
Yeah.
Okay,
yeah, absolutely. I haven't changed.
So when are you going to go again? When's the next purchase?
I don't know yet. No? This year is the plan.
Okay, good.
This year is the plan. It's just a question of looking whereabouts. Interestingly, the place we got in Leichhardt, there's you will probably know, there's the recent government contract that's gone through there. So the Leichhardt, for those that don't know, backs right onto a big air base. I think it's a big air base there, but it's a big military base there. So there's going to be a lot of contractors and work going through that. So there's going to be a lot of jobs going into that area, which is great for us to have property in there. So in my mind, I was like, well, I want to diversify out of Queensland because I've already got 3 in Queensland. But you go where the money is, right? In those regards. So if those underlying things are good for Queensland and the fundamentals are right, then I'd be happy to look at going there again.
And you've had no concerns about investing in the state that you don't live? Because a lot of investors have a lot of concerns with that. They feel as though they need to be able to jump in a car and drive past the property and make sure it's all okay. Whereas you're purchasing in a state. Have you seen all these properties?
No, never seen them.
Never seen them? Never seen them?
I've seen them on Google Maps.
Okay. And that's the extent of it?
Yeah, that's the extent of it. I get reports from my property agents that show me pictures of the inside. I say the inside, I assume it's the inside of my property. I've got, I don't know one way or the other. I've seen a couple of walkthrough videos of it as well, but no, it doesn't concern me. Because, and look, being a renter in Sydney as well, I've never seen the person that owns my place, and I've got property managers that are okay. But if there's a problem, a serious problem, they sort of get on it. So I've got that reassurance that I'm paying professionals. And are they the absolute best at what they do? Probably not. Are they the worst? Well, definitely not. So they're probably at least average or above. So you've got to have.
Sounds like your portfolio is just average all across. Like, well, you're average. Your properties don't sound average though.
No, they go well. They go well. So
well, that's the important bit, right? It's okay exactly. If they're good and everything else is average. You get away with it.
Exactly. So it's not something that if I owned a place 20 k's down the road, if anything, if I had a problem with, tenants have brought a dog into the place and they're not supposed to. Tenants are complaining about the veranda out the back's collapsed and they need it. Tenants are complaining. I'd probably be more stressed because I'd be tempted to go, I'm going to go and have a look. I'm going to sneak it. I'd be like one of these weirdos slow crawling down the street because I don't want them to know I'm the owner, but I'll just have a quick sneaky peek and see what's going on. And the fact that there is that distance, it's probably something that helps keep anxiety and stress down about those things, because I can treat it very much at arm's length and very much dispassionately like that, which I think is important. You don't make smart decisions when you're overexcited and when you're getting anxious about things and when you're emotionally charged.
Just give me plenty more sound bites there as well, Andy, talking about weirdos and whatnot. And you can see the headlines out, can't you? I really enjoyed the chat, Andy. I do appreciate your frank and honest assessment of your own capabilities as investors. I think that the message that I'd be taking from this podcast is that it's important to self-reflect and self-analyse. And if you feel you could be doing what you're doing better, there's nothing stopping you doing that.
No, absolutely.
You can get on with that straight away and get practical, start ticking off, get yourself a nice to-do list, start working through it, and you'll get a level of satisfaction once you do that, of accomplishment. And I'm sure, Andy, you're going to go and do that right now. You're going to think back on this. I'm going to hold you to this. I reckon let's get you back in. I've enjoyed chatting to you. It's been an interesting discussion, which I didn't think it would go the way it did, but what I'm going to take away from this chat is that you're a guy who sees the value in investing in property. You obviously got a plan and the strategy, and I'd like to drill deeper into that because it's been a bit superficial. You want to create wealth through property. That's what most people do, but I'd like to understand the mechanics of you getting to a point where you work out what you're trying to do. So we'll get you back in the studio and have a chat if you don't mind coming back in.
No, that's fine. Although my takeaway from this seems to be that I've just been given a homework assignment.
You have.
So,
I'm going to hold you accountable.
So thanks, I think.
I want to lift you from a 4 out of 10 to a 5 out of 10 property investor.
Go.
That's my mission.
I like it. Dream and achieve.
No, that's good. No, I appreciate it, Andy.
No worries, Phil.
Really
Thanks.
Okay. Remember to check out smartpropertyinvestment.com.au for more stories like Andy's. Just normal, everyday property investors trying to do the best they can. Remember to check it out. If you're not yet subscribing to our daily morning market intelligence, so you're the first to know what's going on property before everyone else, help you make more informed property investment decisions. smartpropertyinvestment.com.au/subscribe. Or if you get on social media, just search Smart Property HQ. Any questions for me or even from Andy, and I'm happy to pass them through to him. If you want some more info on what he's doing, email the team editor at smartpropertyinvestment.com.au. We'll be back again next time. Until then, bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.